I'm thrilled to be joined by Guillaume Lucci, the president and chief executive of Prime Infra, to be discussing infrastructure for emerging markets. So that group of people that were mentioned who maybe can't afford to pay extra for the energy transition. Can you start by telling me, what does Prime Infra do?
Well, good morning. Pleasure to be here. Thank you for having me. Prime Infra is an investor, developer, and operator with permanent capital of what we define as critical infrastructure. And we do that in three key segments. We do that in water, we do that in energy, and in waste management. Present in 6 countries right now, and primarily in emerging markets.
And I know one of the big perspectives you've brought into this conversation is that we have a misconception about the energy transition and about clean energy. What is that misconception, and what do you think is driving it?
Looking at it from the perspective of emerging markets, which I think it's what I'm here to talk about. The fundamental misconception that we see in terms of energy transition is that we label the energy transition as moving away from fossil fuel, when in fact, we see the energy transition as moving towards an abundance of energy, and energy of all forms. We see the various segments of energy production, and particularly electricity here, as overlapping, not necessarily being siloed and replacing every kilowatt of fossil fuel by a kilowatt of renewable energy.
And when you think about the emerging market perspective, how would you reframe that transition? What does it need to mean for the emerging markets to be successful?
So let's just put a little bit emerging markets into context. Emerging markets are fast growing, have obviously significant priorities towards food security, towards energy independence, energy security, towards education, essentially job creation, and uplifting the quality of lives of its citizens. I heard in the previous panel, gentlemen mentioning, of course, the other 90%. These are the people that don't live in North America and in Europe and have obviously very different needs and very different affordability point. What does that mean in terms of energy transition? Well, it simply means that we need to have a very pragmatic view towards the role of fossil fuels. Fossil fuels are here to stay. We've already transitioned in large part around the world, or slowly transitioning away from coal into gas. In fact, the energy transition is ongoing. And in the Philippines, it will mean, and in most emerging markets, it will mean, depending on the very specific circumstances of an economy, i.e., are they indigenous natural resources, fossil fuel in the ground, versus not having them? Do you import them, and so on and so forth? It means essentially an energy mix that ensures we can get affordable kilowatts to the consumer, taking into account what are very fragile and very poor often, or archaic, I will say, grid infrastructure.
Speaking of grid infrastructure, what does that mean in practical terms for how you go on this transition in emerging markets? What needs to happen in terms of grid infrastructure?
Well, so if you think about grids in emerging markets, they have for the past 20, 30, 40 years, they've depended solely on baseload capacity, very basic backup generation to sustain needs that are often in environments where these economies are not industrialized, right? So except a few exceptions. So you're looking at a demand which is very peaky, with a night peak, with a late afternoon peak, with very low demand at night. So you have grid infrastructure that's here to sustain demand that is quite volatile during certain periods of the day, right? That grid infrastructure is unable to absorb intermittency or variable energy from renewable energy. And we're witnessing that all around the world. In fact, we have benefited, I will say, to some extent, to witness some of the failures of advanced economies. When we see what is happening in a number of US states, what happened in Europe, we're actually benefiting from witnessing that grid resilience is a fundamental element. And so a lot of these countries are developing at scale some of the elements that are needed to strengthen grid resilience. That is, for example, pump storage hydro. We're building a few of those that we started 6-7 years ago. Other type of short-term capacity to ensure that we can balance and manage the frequency and so on and so forth in these grids and make them resilient as we increase the input of renewable energy into those grids.
Is it correct to say then that grid resilience is also grid maturity and the challenge of moving a grid from where it is today to where it needs to be able to accommodate intermittency, et cetera.
Well, I don't know if the word maturity is the right one, because you can have a very mature grid without renewable energy, right? It's in fact having a mature grid in light of a significant input of energy that comes from intermittent power. It takes a tremendous amount of time, right? So interestingly enough, the Philippines government, I think it's quite a fascinating story. The Philippines government has witnessed well in advance what was happening in advanced economies. And as a result of that, launched two programs. The first program is a program where we promoted very actively the development of indigenous resources, and that's gas resources, simply because we do need a significant amount of gas-fired power to enter the market to support that need for mid-merit power. And the second program is essentially building large-scale storage in the form of pump storage, actually through an auction. The government is purchasing storage capacity. We are personally building 2,000 megawatts, one 1,400 megawatt plant, one 600 megawatt plant that will be operational by 2030. Very large infrastructure, tremendous amount of capital. And all of that trying to anticipate the needs of the grid going forward by 2030 onward.
It does raise a question, though. In the Philippines, you have the luck of having a lot of natural gas that can facilitate this transition, right?
Yes.
In countries, in emerging market countries that don't have that set of natural resources, where are you seeing successes in pushing the transition and without kind of fully relying on imported fossil fuels?
Well, there are very few success stories. It's extremely difficult to decarbonize a grid and an energy matrix in an emerging market without driving costs up. Actually, we're witnessing what's happening here in Europe. We're even witnessing that in the US to a lesser extent, because the US is benefiting from extremely cheap gas. In fact, the US government indirectly subsidizes the cost of power by selling gas at about half the price that is being purchased here in Europe. But historically, it's been very difficult because we often look at renewable energy cost in terms of generated kilowatt. When you start looking in emerging markets at the cost of renewable energy through the entire value chain, calling total system cost, the type of investments that are needed to actually deliver a kilowatt of variable energy to a customer reliably is actually significantly higher than even imported coal today, which has created a tremendous amount of debate in emerging markets. We have seen what's happening in India, we've seen what's happening in China, and so on and so forth. So coal will remain for the foreseeable future until the grid the grids are strengthened. And eventually, there will be actually a cost point where we can compete with fossil fuels and renewable energy will play on a bigger role.
What needs to change in developed economies and in the way that global energy markets are constructed to be able to create more success stories? Is this something that can be done globally, or is it so individualized to local markets that unless the local markets are able to go on that at their own pace to facilitate the transition?
Well, look, I think it's quite interesting. We put ourselves in a little bit of a bind, I will say. And I mean, I guess as a planet, I suppose. We've driven ourselves towards a tremendous amount of investment in renewable energy at the cost of drying out capital into oil and gas, right? And that's just unfortunately what's happening. So you have companies in the oil and gas sectors that are trading today at 2 to 3 times price to earnings, that are very inexpensive stocks. As a result of that, most of these companies have been buying back the stocks instead of investing into developing additional resources. So if you look at the global scale, we're not replacing nor growing our base of oil and gas worldwide. Our 100 million barrels a day that we produce, our ability to grow that will be marginal. If it weren't for the shale in the late 2000s, that problem would have happened already, right? So we have a limited oil and gas resource at the same time that we are pushing very, very fast decarbonization and pushing all the capital into that sector, which is driving the cost of electricity up, right? At the same time that we're trying to uplift emerging economies so that the quality of life improves and we take the billion plus people that are in dire need of having consistent meals every day to a point where they can actually afford to do that. At the same time that we're facing a surge in demand because of AI, which implies topics of national security and so on and so forth. When you lay all these facts on the table, I think it's extremely evident that at the scale of the world, this is not going to work as people expect it's going to work. Fossil fuels are not going anywhere, certainly not for the medium term. And for that matter, my view is that we're about to enter a commodity supercycle that is inevitable simply by the sheer demand of emerging markets.
Let's talk about AI.
Okay.
Obviously, AI is this fascinating moment for all of us who are sitting in a room on energy transition. It requires huge amounts of energy,
It does.
huge amounts of water, huge storage capacity. It's perhaps not delivering on its returns in the right way. What does that mean for emerging markets and how they think about their energy needs?
Well, so if you look at Southeast Asia in general, the growth of AI has been slow, very slow. Because initially, AI demand, at the end of the day, is all about demand for electrons. And our electrons are quite expensive. If you look at where AI is actually deployed in Southeast Asia, it's largely deployed in economies that have low cost of power, whether it's Thailand, to some extent Vietnam, but not at scale because there is no abundant source of power, right? So what does that mean? It means that we need to probably develop indigenous gas resources faster than we are. We are actually drilling offshore. We operate today the only offshore gas platform in the Philippines and continue to drill to try to increase our source of indigenous gas, hopefully to get to a point where the price point is attractive enough so that we can onshore data centers. But that's what it will take for us to be able to receive that sector.
And do you think it can be done fast enough because there's a risk, right, that this inability to engage in scaling AI in emerging markets in Southeast Asia means that the gap between kind of manufacturing, et cetera, rises between some of the other emerging markets and Southeast Asia. Can that gap be closed fast enough to offset the potential economic loss?
No, so the answer is I think it cannot. There are conflicting interests. On the one hand, we are trying to create abundant sources of energy, as I said, really increase energy supply of all forms, trying to bring the price point at a level where we can hopefully stimulate the need for data centers, which is a fundamental issue for all economies, and that's not going anywhere in the short term. At the same time, trying to drive economic growth and job creation. All of these are conflicting interests. And I think the challenge is going to be tremendous for emerging markets. We are obviously all hoping for sustained, very fast growth of emerging markets for the next decade and a half, which has been the story that we've all enjoyed, frankly, in terms of economic growth worldwide. And it will be greatly tempered by increased demand of energy as energy prices go up.
I think we've laid out a number of challenges above. When you go through that conversation, what are the practical solutions? What would you like to see happen, and what needs to happen to offset some of these challenges?
Well, I think emerging markets have a lot to learn, and and benefit from the learnings of advanced economies. And that's particularly true in terms of grid strengthening. Actually, quite remarkable that we're discussing here the challenges that the grid poses to the energy transition. We knew that was the case already a decade ago in emerging markets. We have poor grids. We couldn't accept any power plant any day of the week. We knew we had to balance these grids and so on and so forth. We started working on pump storage hydro 7 years ago, and it's going to take us another 5 to build our pump storage hydro. If you put that into perspective, gestation cycles are 10, 12, 15 years, right? Today in the United States, 80% of the storage capacity comes from pumped hydro. There's 36 gigawatts of potential projects in the country. So I think there's an understanding of what's needed. If you look at China, if I take a small parenthesis, because it's a perfect illustration of the situation, about a third of the world pumped storage hydros are in China. In 2024 alone, they added 8 gigawatts of pumped hydro. Why? Because they're developing a tremendous amount of renewable energy. They have to do it for energy security purposes and just preparing themselves to make the grid much more resilient. So what is the answer? I think the answer is twofold. First, have a pragmatic view of the need for fossil fuels and accept the fact that they are an intrinsic part of the success of those economies, and they're needed for those economies to grow and achieve what are the most critical objectives, i.e. attend to the needs, the societal needs of those economies. And second, ensure that we invest heavily in grids to get us to a point where, as we deploy more and more renewable energy, we actually have grids that don't face blackouts on a recurrent basis, and we can provide our customers with affordable, abundable, resilient kilowatts.
Is there a risk that in 5-7 years' time, we could sit on the stage and have the exact same conversation? Is there a risk that we do not move quickly enough?
Absolutely. Actually, we are in this situation here, having had debated this for, the past 15 years. The fact that our grids are not capable of absorbing renewable energy is not an epiphany of 2026. We've known that for a decade, and here we are. So, yes, it's absolutely correct that we could be facing this. These projects are extremely difficult to develop. Large-scale grid storage or balancing infrastructure, ancillary services, none of these projects are easy to do. It's a lot harder to do that than to build a power plant. So the likelihood of this being a continuous problem is, I will say, high. Thus, this reinforces the argument that fossil fuels, because it's the fastest development cycle today, are likely to continue to play a critical role in those economies.
Guillaume, thank you so much. This has been such an interesting conversation. Unfortunately, we have to stop.
All right.
I would love to invite my colleague VJ back to the stage. Thank you so much.
Pleasure. Thank you. Thanks. Appreciate it.